What if the biggest risk in the stock market isn't the market itself, but the habits you don't even know you have? Most beginners fail because of small mistakes that seem harmless until it's too late. I'm not here to give you the same old advice. I'm here to show you the traps I fell into so you don't have to. Stay with me until the end, because one of these mistakes is a literal wealth killer. Investing in the stock market is how real wealth is built, but for most beginners, it feels more like a trap. It doesn't have to be that way. Here are 7 common mistakes you need to avoid to keep your money safe and growing. Mistake number 1: following hype. The first mistake: chasing the hype. You see a stock trending everywhere. Everyone is talking about it. Maybe it's even a giant like Tesla. You rush in, desperate for quick gains. But here's the reality. By the time it's trending on your feed, it's often too late. True investors don't chase noise. They stick to research. Mistake number 2: investing without knowledge. The second mistake: investing without understanding what you're doing. Many beginners treat the stock market like gambling. They buy random stocks, hoping something will go up. But investing without knowledge is like driving blindfolded. You might move, but you're definitely going to crash. Mistake number 3: panic selling. Mistake number 3: panic selling. This is the biggest hurdle every beginner faces. Imagine this. You invest your money, and suddenly the charts turns red. Your heart skins, fear kicks in, and you sell everything. But here's what most people don't realize. The market going down is normal, and the market needs to breathe. Selling in a panic just guarantees you lose money instead of letting the system work in your favor. Mistake number 4: not diversifying. Next, in putting all your money into one stock, it feels like a smart move at first, right? You've done your research, run the numbers, and found that one perfect company. So you decide to go all in. But what happens when the unexpected hits and the charts start bleeding red? That sinking feeling in your stomach is exactly why you never put all your eggs in one basket. If that single stock crashes, your entire life savings could go with it. Smart investors spread their money across different companies to stay protected. This is diversification, and it's your best defense in a volatile market. Mistake number 5: expecting quick money. Another big mistake: expecting fast results. The stock market is not a get-rich-quick scheme. Real wealth is built over time, not overnight. If you're looking for instant money, you're more likely to lose what you have. Mistake number 6: investing money. You can't afford to lose. This one is dangerous, and it's also a trap many fall into. Investing money you actually need: rent money, school fees, emergency savings. When you invest money, you can't afford to lose. Every small drop feels like a disaster, and that leads to bad decisions. Never invest $1 that you aren't prepared to leave untouched for years. Mistake number 7: ignoring long-term strategy. The final mistake: thinking short-term instead of long-term. The biggest gains in the stock market come from patience, not constant buying and selling. The people who win are the ones who stay consistent. The truth is, investing isn't about being lucky. It's about avoiding costly mistakes. If you can avoid these 7 things, you're already ahead of most beginners. If you found this helpful, subscribe for more simple investing guides. And before you go, which of these mistakes have you made? Or almost made? I'd like to read in the comments section.